Well, it's been a rough couple of weeks for Bitcoin, and surely after the last few weeks that we've had, we are due for some sort of a bounce. Things cannot continue in one direction forever. So what I want to have a look at today is an overview of what we saw with the price action for last week, and then we're going to take a look into what to expect for the week coming. As always, this is your Sunday Bitcoin market update. So if you are new here, welcome. If you are returning, welcome back. Be sure to smash that like button, hit subscribe if you're not already subscribed. And let's get into this video. Now I'm starting on the daily time frame so that we can get a big picture view of what is going on. And once again, like we've been saying for the last few months, Bitcoin is still in its accumulation range and we are still waiting for that breakout, whether that's to the upside or the downside. We are essentially just ranging between around the 56.5 region to 73, maybe 74K kind of area. Now, we did open the week pretty dramatically with this move to the downside. It did hold the 200 EMA. Now, if you've been watching this show for a while, then you will know that we did have a big area of liquidations right around here, and we were waiting for the market maker to come and take them at some point, and this was the week that they chose to do that. So now that that liquidity has been taken, I'm going to refresh and have a look at where the new liquidity is. Because what would have happened in this move to the downside is a lot of people would have opened short positions, and that means that there would be new liquidity that is built above the price. And we also would have dip buyers that have open long positions. So we may also have new liquidity below price. So this is a really good time to refresh and see what is happening with all of the current open leverage positions. So I'm going to use the look back period of 1 month on High Block. And the reason that I'm choosing 1 month is because if we go to where the peak of this move was, that was on the 6th of June and we're currently now on the 30th. So I want to see all of the positions that would have been opened down here. And so I need a larger range than this period of time. So now when we look over this period of time, we can see that there is a little bit of a pool of liquidity down here. And we've also got some liquidity to the upside. Now, what I do like about this chart is that there is only one more kind of large area of liquidity below price, which is just a little bit above 55,000. But there's a lot now being built above price. Hopefully by now you've learned that when there is open positions, they are the target for the market maker. You know, when we were talking about this being potential second side of an M and price heading down, people were still very, very, very bullish, but we were always talking about liquidity that was here and liquidity that was below here, and that there was a very good chance the market maker would come for it. And so the same works in reverse. There is a lot of liquidity to the upside. Now, when they come for it, we don't know. That's the only difference. So we can't tell by looking at this when we will move to the upside. And we also have to use experience to know, well, how far away is that liquidity from the current price to make it kind of realistic that they will come for those levels very soon. So this pool here is sitting at about the 67K region. And then up here, we're well and truly above 70K. So something extremely bullish would have to happen for us to come for this anytime soon. And the liquidity that is below the price currently is sitting at about 55,700, and that would break the prior low if we were to come for that. Now, when I transfer those zones onto the daily time frame, this is kind of what it's looking like. So we have this high kind of pool over here between about 66 to 68K, and then below price we also still have about 54 to say 56. If we translate that to the model that we trade on this channel, with this being an M formation, we would expect some sort of a rebound now as price will reattempt around the 50 EMA. Because the liquidity is higher than the 50 EMA, it may break up into that zone, but all of this would be a target. So the 50 EMA right up through this liquidity zone would be the target if we were to see upside this week, and then we would need to reassess in that whole area right there if there were any bearishness. If price is struggling to break above that area, then we would get ready for another actual move to the downside, because after an M formation we expect a retracement and then we expect another level drop, and that drop could take us down into this lower liquidity. You know, one problem that I see with the price is that after we had this big move to the downside, we really haven't had a strong push out. It's been 6 days now since we had that move, and there hasn't been an influx of buyers pushing price back up to the upside. So we really are just ranging, and ranging means that the market maker is accumulating contracts. and they're accumulating contracts for the purpose of making a big move. How you decide what that big move is essentially with technical analysis. And as I said, we trade a method that is telling us we should have some sort of a recovery attempt, and then we reassess. If there's a lower high, then it is what it is, and we have to be prepared for that. So I wanted to show you something on the 4-hour time frame. This was actually a joke that I was making to the guys in Discord because they were saying that this was a W formation right here. And I said, remember when you thought that this was a W formation? So I named that memories. But on the 4-hour time frame, what we have, these are the 3 hits to the downside that created the higher time frame drop. Then we had the retest of the 50 EMA in this consolidation. And then we went into potentially a third, could look like this, or it could be coming. Now, what I want to point out and have us get ready for on the 4-hour time frame is this potential ascending triangle that looks to be forming now. Whenever retail patterns form over a weekend, I pay attention. And the reason that I pay attention is because the market maker's not around on the weekends. And so patterns like this can be set up, especially knowing that the next move to happen is going to be the false move when the market reopens. So if we're building this ascending triangle, there could be a chance that we get a breakout of it. And look, the breakout might hold until it comes for these higher liquidations, or the breakout might end up being the fake move and then we come down here. I don't think, and I don't really hope that the second scenario is going to be the one this week. And the reason for that is there's only so much retail can take, right? Like we've been down since the 6th or 7th of June, enough now. You know what I mean? Like enough now. It's sort of likely that we'll have some sort of a relief, just enough to get everyone bullish again and, see all the tweets of I hope you bought the dip and all that sort of stuff. Just give us some of that false hope before there's any more dramatic moves to the downside. I certainly don't think the downside is over at this point in time, but I am expecting some sort of a move to the upside. Now, in saying that, I also expected that last week. So let's have a look at how last week played out from the weekend trap that was, because on my last Sunday update, we only had this price action here. And if I zoom in to that area, you can see here that I was expecting more downside, but I thought we would have a stop hunt to the upside before we went down as the false move. And we actually didn't get that at all. And the only reason that you don't get that false move out of a weekend trap is that there is enough positions built in the wrong direction that the market maker doesn't need to do it. So people must have been going long last weekend. It's the only way that I can explain it. When we have a look at the open interest was rising over that weekend. So therefore positions were being opened. And now we know they must have been long positions because this fast move to the downside well and truly have liquidated them. So that can happen. We're not always going to open the week with a stop hunt. The false move can sometimes be tricky to identify. And when it is, you just sit out. That's all. You just wait until something becomes more obvious. Now, we can see that false move actually ended in a very large vector candle right here with a very large wick to the upside. So at this point in time, this is where our trapped traders are. And if we have a look at the current price action right now, we have not returned to that zone. So as long as we stay away from this particular candle right here, then they're keeping those traders trapped for a reason. And again, probably the 100x traders are already liquidated from there. The 25x might be left, 50x, who knows? But our high and low of the week will reset when the market opens, Sunday, 5 p.m. New York. So it's likely the high of the week is going to be up here at about 64,100, and the low of the week is going to be the bottom of this wick right here. But as I zoom in on it, that green candle right there is the week opening candle. So that top is actually at 63,800. And when we measure out the halfway mark of that can also be a key area as well. So the halfway mark is, say, at around $61,000, and we're currently above it. So if we remain above it, then that would add to our pace of potentially moving up this week. And then again, if we break below it, then we're probably going to head further down. So let's have a look at the heat map orders, because we can see down here that we've got some pretty large buy orders. Oh, they're not that large, but they're the largest of what we have available at about 59,200 all the way up to about 59,800. And then above price, the best we have at this point in time are these orders here, which is sitting at 65,000. 34,000. Other than that, there really isn't all that much unless we're talking extreme levels like 50K and back at the high, the 72,100. So when we have a look at that on the chart, that's what this looks like. So our long orders are down here and the shorts are all the way up here. Now what I want to see is where are the weekend traders liquidation levels, because that is what the market maker is going to come for first. I'm going to go back to high block for that. And I filtered this out just to show me the highest levels. And you can see here that this green dot here, that was one of the high levels. They would be the 100x traders. They've already been liquidated because price has returned there. This would be the 50x. Again, price has already returned there, so already liquidated. And the next kind of key area that we have would be the 25x traders up in this bubble here, which price has not yet returned to. So this number has my interest, and that is at about 62,590. And I'm also seeing that just generally there is more liquidity above price than there is below price. The delta is red, meaning that there are more shorts open currently than there are longs. And therefore, in order to liquidate shorts, we're going to have to move price to the upside. When we have a look at the open interest, again, look how much that is rising. So when the open interest is rising and the price is rising, we're not going to have volume yet because it's a weekend, but I would be watching for that as a third one. So if the volume starts to rise soon and we end up having all three rising, then we have confluence in that trend to the upside. So I would not expect any more of a move to the downside, and I would not expect a false move. We may not even come for these orders down here, so don't bank on that. But if the trend remains now and we continue to make higher highs and higher lows, and that open interest keeps rising, and next we bring in the volume, expect that we may actually be coming up for potentially this 65K kind of region. When I transfer some of those liquidation levels, you can see here that it makes sense why these orders are down here, because this is where the largest long liquidity is. But above price, you can see that there's a big area around here, and if we break through that, there's another one around here as well. And the combination of these two would definitely be much larger than what we have down here. So it may be in the market maker's best interest to send price up, even if it's only temporary. There could be some good short-term long positions, and then we would just have to reassess once we get into these levels to decide if there's going to be any more that we can get out of it than that. Now let's have a look at the Ethereum liquidity as well and see what is going on there. And again, look at this. So really, the quickest way to sort of identify is by looking at these sidebars right here. And you can see how the very large spikes out to the upside. They come all the way out to the side of my screen. But when you look at the longs, they don't come out as much. So we can see that there is a lot of large levels of liquidity at some pretty key areas on ETH, not to mention everything else in between, which just adds to how much liquidity there is to the upside currently in comparison to what's to the downside. The delta down here is also to the shorts as well, meaning more people are short currently than they are long. It would be very, very easy for the market maker even to just come out to some of these lower levels right here, which would be these circles here. So we're looking at about 34.10, 34.4, and then probably up into this one here at about 35.07. It'd be very easy for the market maker to at least come for one of these two lower levels. Now, when we have a look at the Ethereum chart, what we can see when we zoom out on this is lower highs for really quite some period of time, all the way back to the end of May actually, lower lows for a really long period of time. And after this low right here at the beginning of last week, we have created a double bottom, but also higher lows. So would have a potential chance of changing the trend again. I wouldn't turn extremely bullish on it until it started to create higher highs, however, because there's nothing to say that, this might not move up and create yet another lower high, which would not be ideal. And so when we add some of those liquidation levels that we just spoke about, again, you can see the thicker and the larger the lines are here, the higher the amount of liquidity available. So we definitely have more available to the upside than we do to the downside currently. When we have a look at the heat map on Ethereum, right now what we have is some shorts sitting here. Now these are reducing already, and they'll probably be gone by the time this video is out, but we do have shorts currently at 3,400, trying to keep price under 3,400. So By the time this video goes out, if we are above 3,400, you know that those got eaten up and we're through it now. So therefore, start looking for bullish market structure if you're wanting long positions, because the next level of shorts is really very far away. Now, if it holds and we break down, then we do have some other large levels below price at about 3,300 and 3,280. When you look at that on a chart, it would revisit around these lows. So again, I don't think it's likely, but even if it did, even if it came down, hit into those areas, I would actually still think that we're going to bounce out of that. That's what I would believe to be a false move if we headed down first, because I know that there's only this small amount of liquidity. There's not much available, and they're not eating into too much of these trap traders. So even if the week opens and we actually come down into some of these zones, I would still think that that has a chance of creating a multi-week W formation, and we will move out to the upside and come for this next. So really all we're waiting for is, where is the perfect entry to long? I have been building positions all weekend on the assumption that they're going to keep these trap traders trapped. Same with Bitcoin, same with Solana as well, actually. But what would invalidate that trade idea would be if price started to eat too much into these trap trader areas. So speaking of Solana, I'm going to go over Solana next. But if you are looking for an exchange to trade on, be sure to check out the links in the description down below. We have added CoinW as another exchange option as well. And all of the exchanges that we talk about on this channel do get you massive trading fee discounts for life, as well as give you access to the free side of our Discord. And if Discord's not your thing, we also do have a Telegram, which we don't often talk about, but we do have a Telegram. Make sure you use the link in the description down below for our Telegram, because there are tons of fake Telegrams out there, and the only way to make sure that you have the right one is to grab it from our YouTube videos. And also just note, no one from Trade Travel Chill will ever DM you and ask you for money or promise that we invest on your behalf. So if that ever happens to you, then know that that is absolutely false and block immediately. Now let's talk about Solana, because Solana is interesting. We had the surprise news of the application for a Solana ETF that temporarily pumped price. This is the perfect example of the fast move is the false move, because you can see right after we had that news pump, we've come back to recover pretty much 100% of that move. Now that's okay, because that just rebalances Solana's books. It doesn't make Solana bearish. If we have a look at our levels just in this area, all of this would be a rise level 1. This is our board meeting after that. This was rise level 2, and we're in our retracement after that. So I'm also still bullish on Solana for the moment. Like, I do think, yeah, everything to me is looking like we will have a much nicer week this coming week than we have had for the past few weeks. So this is the reason that I built positions on Solana over the weekend, because this right here was the last vector candle to recover in that move to the upside. And as you can see, we got a bullish candlestick formation out of that area. So if I'm to believe that this is rise 1 and this is rise 2, there should be another rise to go. And essentially that's what I'm waiting for. These green areas here are previous levels of liquidity that I had drawn out, but let's do it fresh just to make sure we have the right information. And look at this. It really stands out. When you have a look at liquidation heat maps like this, it just becomes very, very easy to identify where all of the leverage is and what is going to be the target. Look at the leverage to the downside currently. So this would be open position longs. If price were to reverse to the downside, these would be liquidated. And you can see that there really isn't much, right? I don't know why. When I look at the price action, I don't know why people aren't long. Even the delta is still red, so people are still bearish on Solana. And when you have a look at the comparison to the upside, look at all these large spikes out, and also just how many lines there are. There is a lot of liquidity to be taken if we move to the upside this week. Now, when I transfer those to the chart, you can see that here as well, that liquidity, we've got a big area around the 800 EMA on the 1 hour time frame, and then we've got another big pool here just a little bit above that top from that news that was created, which makes sense. People would have shorted the peak of that news thinking we were going to come right back down. Now, currently those shorts are correct, but if they don't close their trades and take profit, then they will be liquidated if price is to return to this level. This week in news events, what have we got coming up that we need to be aware of? On Monday, we have ISM manufacturing. That will be around about the US Open. We also on Tuesday have Fed Chair Powell speaking. What is he talking about? Panel discussion titled Policy Panel at the ECB Forum on Central Banking. Volatility is often experienced during this speech as traders attempt to decipher interest rate clues. So be careful of that time as well. That is also going to be right on the US session opening. And then we have JOLTS job openings. On Wednesday, there's a few events as well. ADP non-farm employment change, ISM services PMI, and we have the FOMC meeting minutes. Now on Thursday, we have a US bank holiday. I will be back with you before then anyway to talk about the price action. But sometimes if the US is having a bank holiday, especially on a midweek reversal type day, it can push the midweek reversal either forward or backwards. So if we have a bullish week, expect a trend change either Wednesday or Friday. If we have a bearish week, same deal, but in the other direction. And then Friday, there's a few more events as well, which will be happening around the UK close, which is usually where the trap gets set for the weekend anyway. If you are keen to learn any of our trading methods in full, we do have full online courses for all of our trading methods, zero to cryptos for absolute beginners. So if you've watched anything in this video and said, what the hell is she talking about? I don't even know how to buy Bitcoin. This would be the course for you. Then we move through to our whole trade by design system, method that we trade, the liquidity software that we use, as well as other strategies, including our scalp trading strategies. And if you are a trader and an investor, you might be interested in our investing courses, cryptability, and portfolio strategies. All of this is available on the TTC website. The link is in the description down below.